Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your hosts, Joel O'Connor.
This is an Udall puppy here, isn't it?
And Dennis Dick.
I bid a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to this Friday edition of Benzinga's Pre-Market Prep, brought to you by Thinkorswim. I'm Spencer Israel, along with Joel Conan and Dennis Dick. And we do have an echo, so I don't know if it's better now, but welcome anyway, folks. Sorry about that. I may or may not have been in bed as recently as a half hour ago, so do with that information what you will. But we got a couple guests on this, the last show of the year. Our first guest is at 8:15. Curtis Melanopoli. He is the head trader at compoundtrading.com. And then at 8:35, we're going to be joined by Sean Udall, the CIO of Quantum Trading Strategies, and one of our favorite guests. Joel, how are we doing in the S&Ps and in the market this morning?
Pretty darn good. S&Ps closed at 45 even. We are trading straight up from there. Pre-market low was 45 even, 44.75. Moving up now, 52.75. Not a lot here in the 50 handle. We have a triple close area right at 22.60. Crude just hanging out, quiet range. Can't manage a close over 54, or actually another close over 54. Four highs right over that area. And gold and silver, we have them trading gold up 50 cents and silver hanging over 16 bucks at 16 and a quarter. Well, let's bring in the Nvidia expert. Dennis, how you doing today?
How's it going? Hopefully no echo on my voice here. We're blaming Spencer, though. So, Joel, you're in the clear here today. And I know, Joel, you are looking forward to tonight's Orange Bowl.
I am, and I got a little Orange Bowl story, and it's a Y2K story. Are you guys ready for that, too?
Is this the one you told last year?
Which one? Did I tell this one last year?
Maybe. But
Spencer, were you born in 2000? Were you around then?
No, I wasn't, but keep going.
Okay, so Lisa and I and the girls go to Florida. This is Y2K time, right? And so we're checking the flights. This is before we went, and the flights that come back, they're really cheap on New Year's Day of 2000, right? No one wanted to fly, and I'm like, Lisa, book those tickets. We'll fly back. Well, lo and behold, the day before, we get a phone call from the airlines, and they said, well, we're going to have to cancel your flight because there's really not many people that want to fly that day. And they're talking to my mother-in-law doing this, and they gave us two options. Well, actually, they gave my mother-in-law one option. So she took the option to fly back take a later flight that day. Well, I come in the house or come in the condo, and she tells me United called. They had to reschedule your flight. They're willing to put you on a first-class flight, anytime later that day or the following day, but I put you on one later that night. And she claims this is the only time I ever got mad at her because the Orange Bowl was on January 1st that night. And if we stayed an extra day, I could go to the Orange Bowl. So I called the airlines. I switched my flight until 7 a.m. on January 2nd. And I'll just tell you the quick story about Y2K when it flipped from 11/59, 1999 to, Y2K. I got up, I picked up the phone, I flushed the toilet, and I ran to water. And I said, everything's fine. We don't have to worry about Y2K. So Lisa and I go to the Orange Bowl the following night. It goes into triple overtime. Okay, Michigan beats Alabama at triple overtime. We watched the game. We drove back to Boca. We got back to Boca about 3 o'clock in the morning. We had to turn around, get up at 6 a.m. because they had a 7 o'clock flight back out of Miami to come home. So that's my Orange Bowl Y2K story.
And you survived Y2K. That's what's going down in history here.
I think
Joel survived. He got the T-shirt. Joel survived.
I am wearing your shirt right now. I wish you guys could see me on video right now. I'm wearing my Orange Bowl 2000 shirt.
I think what's most interesting about that story is that you woke up at 6 for a flight at 7.
It was like maybe 8. It was like, yeah.
That's
it was
what you had to
early.
do back in 1990.
I know.
You have to go through all that security.
All right, let's get to some actual stocks here.
At 8:10.
8:10. We started
8:10.
late here. We got stocks. Do you want to start with the whole Nvidia debacle from yesterday? Because that was
That
a
is
wild ride.
call of the year for you. I have to make that the call of the year for you.
I
Right
called
there.
the entire path. I said the flush. I said it starts to turn around 10 o'clock, although really started to turn around 10, but then it came back in at 11, 11:30, and then it really, so I got the time out a little bit off. Didn't really run until 11:30, and then it came back, and then it kept coming back, and it just keeps coming back here this morning. It's up another 2 points here in the pre-market, so that was your Nvidia correction here, folks. We had the 2-day correction, and it's back. Nvidia's back. New all-time high today on Nvidia, Joel?
Triple steak dinner and 5 lunches that it does not make a new all-time high today.
Okay, this is bad echo on me, so I'm going to stop talking here for a second while Spencer figures it out, and Joel will continue to do technical analysis here on NVIDIA. Give us some numbers.
All right. Well, let's see here. We're trading up in the pre-market, $1.67 at 113.10. So let's go to pre-market trading. Run into a little problems at 114. That's an interesting level because remember when you had the pop off the low, off the left low yesterday or 2 days ago, you came right back up to 114 even here. And Spencer, we're getting some more technical difficulties here on both of ours. Says you guys need echo cancelers and difficult to understand.
It's only Dennis that has the echo.
It's something. Gotta be something open on that end because my voice is coming through, obviously, and then it's echoing back there. So, anyways, we're looking at it in the background, guys. Sorry about the echo. Hopefully, it's going to be better.
Wouldn't be the end of the year show without some final gremlins in 2016.
All right. Anyways, 114. That's a level to keep an eye on. That's your pre-market high, and that's also where the bounce came yesterday morning, or Tuesday. What is today? Friday on Wednesday morning.
What about Goldman Sachs also? Because we had talked about Goldman Sachs. You had talked about Goldman Sachs yesterday, Joel, and we wrote about it, on the site afterwards. But what happened there?
Just some profit taking here in the financials. We kind of talked about maybe the Nvidia nervousness would spill over into other issues that have had big run ups, and was just looking at this 240 area, and Goldman Sachs had a series of lows at the 240 area. Took that out. I mean, you got a little bit of a trade off it. You traded into the 237 handle. No real serious technical damage here. Actually, the low was 36.64. Bounced up to close at 38.18. Trading a little bit up in the pre-market. But Goldman's had an incredible run here. High of the move, 245.57. Really hasn't backed off that much. So take a look at it. Keep an eye. That former support point will act as resistance at 240.
I don't know if I'm supposed to talk here now with this echo going on, if you can understand me, but AMD is what I wanted to talk about too, because it has been paired up with Nvidia here over the course of the last month. If you put those two charts on each other, they look very similar. I don't know what it is, but AMD and Nvidia are moving very much in sync together here. This morning, Nvidia is trading up 1.67%. AMD is trading up another 2% here. So if you're trading Nvidia or AMD, keep those two stocks because they are moving in sync, at least over the course of the last month.
All right, we're going to take our first break of the day. We're going to grab our first guest, and we're going to fix Dennis's echo all in one fell swoop. So we'll be right back with Curtis Melanopoly, the head trader at CompoundTrading.com.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Alconin, along with Dennis Digg and a tardy Spencer Israel. And we have Curtis Melanopoli on the line, and he is the founder of CompoundTrading.com. Curtis, how you doing on this last trading day of the year?
I'm doing great. Yourself?
We're doing well. Just give us a little bit about your background. When I spoke to you on the phone before, you said you've been interested in the markets for quite some time. Give us a little background and how you ended up founding CompoundTrading.com.
My background started about 30 years ago when I was a youngster working for promoters on the market. And then over the years, running family businesses, I've been an investor. And a couple of years ago, it would have been 16, 17 months ago, I found myself in a market that was kind of going sideways there. And it, did for a while. So I started day trading. And so really my day trading experience is, just shy of 2 years now. So I moved from being an investor for decades over to day trading and learning the process of day trading and swings, short swings, and now we're working with a lot of algorithmic modeling, and so I hooked up with some software engineers, and that's how we ended up forming Compound Trading.
All right, and just tell us about the services that you offer there at Compound Trading.
Right now, we've got a standard trading room where we share our charting, and it's a chat room. So real standard issue there, and then we've got a morning newsletter that goes out to our members, and then we've got some algorithmic modeling that we do with. Right now, we've got 6 primary areas of the market that we're working with. So we're mainly working with commodities and currencies. So there's newsletters separate for each of those, and that's our initial offering, and we're just kind of exiting, getting out of the beta stage into our official launch is January 1st.
All right, moving on here to what you're looking at currently here, and had a nice move in gold and silver.
I still got you there?
Yeah, you do. Sorry about that. Let's talk about what you're currently trading now, what you're looking at in the markets today. Gold and silver had a nice move yesterday. Was it something that you initiated yesterday or something you had before? Talk about your setups, what you're trading in the gold and silver markets.
Well, we actually moved. I guess it was July. July was when we started publishing our models and our setups for gold, silver, the S&P, volatility. We're working with the U.S. dollar yen relationship, but anyway, so we started publishing our calls back in July, and they were short term and long term, and the long term have all kind of expired over the last. So we see the market inflection happening right around now, and specifically to gold and silver, we've seen that bottoming rate in this range, and so we had called that pretty much spot on, as long as it's bottomed. But
You just cut them off.
We're going to break.
All right, quick break. We'll be right back. Okay, sorry about that, Curtis. We're kind of already in the New Year's Eve mode here. Anyway, so
No problem.
let's get back to the gold and silver here. So, are you
Sure.
playing it through the ETFs or are you playing it through individual issues?
We're doing both, actually. Of course, JNUG, NUGT, that type of thing. We're in, but we're also in some specific equities, IAG, AUI, and looking at some others right now.
And what is the duration for these trades? Is this, like you said, you were doing primarily day trades? Is this something you'll be in for a day or two? Do you have specific targets? Is this something that you're moving your stop up in?
Uh, yeah, so I'm fairly flexible that way. Like I do a lot of short-term day trading, of course. But if I can get an inflection, if I can get a reversal in the market, I'll so I'll day trade it, and if we can get the turn right, then I'll hammer down and I'll stay with it. And as we get to points in the market that we think the reversal is going to continue, turns into a swing, and then it could be a fairly long term. So yeah, I'm really actually fairly excited about what's possible with the metals early in the new year. Not to say that I'm absolutely convinced it's going to happen, but it's looking pretty positive right now.
All right, let's shift gears to the oil market here. Crude, couple days of quiet ranges here, but nice move since OPEC. How you playing the move in crude oil, and what equities you trade in the USO, or what's the best way to capitalize in the move in crude oil?
Well, with crude, we have a number of members that actually are trading futures. I'm not. We have a 24-hour oil trading room opening in early in the year. Myself, up until UWTI was stopped, that's where I mainly was. I was finding myself capitalizing on big moves there. But specifically to oil itself and the way it's trading right now, the recent uptrend, maybe the last 6 weeks or so, have been really good. We actually caught the move earlier in the year when it changed direction. But right now, specifically right now, we see crude really close to a really important resistance. And I see here this morning it's just started to come off a bit. Yeah, so we're trading specific equities too. But myself, I've been trading mainly the ETFs, ETNs, and then we have a number of members from the Middle East that are on the futures.
All right, let's move on to the S&P. I'm hanging out here near all-time highs. A little bit of a pullback yesterday. Everyone seems to be talking about 20,000 here. S&Ps looked close the year out on a positive note. We're currently trading up S&Ps. Give us some parameters that you're looking at in the spiders.
Well, we're actually thinking now that the run is possibly close to taking a breather. Now, of course, it has I guess right before Fed speak there, and we kind of see that continuing right up until President-elect is getting close to the transition. So right now, I don't have any specific expectations for it because I think the first 3 weeks of January are going to tell a lot, especially as we get closer to January 20th. Yeah, that's a question mark for us. We're a lot more gung-ho about the metals and even oil, going into the new year. The S&P, I haven't got it nailed down, so we're taking that one day by day.
All right, see what happens in January. Curtis Melanopoli,
Yeah.
he's the head trader at compoundtrading.com. Curtis, thanks for coming on. We'll have you on again soon.
You bet. You bet. You take care.
All right, 8:27 here. Let's see how we're doing with our echo. I haven't seen anything out of the chat yet.
I am working on it. I do hear an echo, and I am.
Is it Skype or is it us?
It's a Skype connected to us issue. Kind of hard to explain and difficult to figure out because obviously this doesn't happen every day, or we didn't know about it every day. So I'm working on this in the background while also listening to you guys and the show. So I'm all over the place right now, but I am with you, and I'm here.
All right, let's bring Dennis back in and pick up where we left off.
So we were talking Nvidia, we're talking AMD, but there was a lot of other movers there yesterday too. Stocks, so this week's kind of funny. Overall the week can be quiet, but individual movers do abound as portfolio managers are jockeying at the end of the year here. Mobileye, huge day for it yesterday. What was the catalyst there, Spencer or Joel?
I got it.
It
was a strategic partnership with Here, which I haven't ever heard of before, but a strategic partnership in order to let's see here. Announcing plans, and what they're going to do with that is linking their respective autonomous driving technologies. So that was driving the stock higher. Looking at Mobileye here, nice session. Went off the board at 38.44. Let me see if I can find any kind of area of resistance here. Really not much until you get into the 39 handle. I see a trio of highs between 38.95 and 39.22.
Dr. J's asking us about Cabela's. Cabela's is getting the beats here this morning. Concerns here that the merger might be delayed is your catalyst. So obviously they're merging with Bass Pro, and there was a headline here this morning. If I just go to the trusty Benzinga Pro, it says Cabela says Capital One no longer expects to get OCC approval under BMA in time to permit the Bass Pro deal. Bank says it is supposed to or agreement to close by first quarter of or 27. No, what's it say?
October.
H1 2017. October 2017.
October 2017 is when the merger will be delayed until, so just about a year from now. So let's all take a nap and wake up in October.
Here's the concern. All right, so Cabela's, now all of a sudden you're looking another year out. Obviously, there's a deal here on the table, but they're hitting it pretty hard here this morning. Not so much for the time value of the money down 8%, because we know 8%, so the time value is a lot less than that from 1 year. It's a concern that maybe there's some potential here that this deal doesn't get done. And if the Cabela's deal doesn't get done, retailers have been slammed in the last couple of months. So Cabela's is held out because there's a cash deal on the table, and they're going off the board. But if for whatever reason this deal doesn't get done, I think Cabela's doesn't just go back to where it was at 54 before the merger got announced, because they had ran up. I don't even know if it goes back to 50. It might go below 50. So you get your risk arb saying, okay, what's a 57 here now? Upside. Do we remember what the price was? Was it 64? I'm going from my just from my memory here, but was it 64, Spencer or Joel?
I do not have get access to my pro here. But sure does look like 63 or 64, because 62.85, or let's just see where it spiked to, and that can give you a pretty good idea where the type. Yeah, it must have been 64, because on the initial news it spiked to 63.60.
I think so. I think the price was 64. Correct us in the chat if it wasn't. But now you look at it, okay, it starts to get a little bit more attractive. Deal goes through, 7 points up. Deal falls apart. I'd say at least 7 points down, maybe worse considering how bad the retailers have been in the last couple of months. I mean, you look at the Kohl's, you look at the Macy's, you look at the JWN. In the last month, they've all been slaughtered. JWN, Kohl's down about 10 points. JWN is down about 13 points in the last 3 weeks. Just quietly, we've had a retail massacre. In a season, usually December is better for the retailers. Has not been the case. If you're looking for weakness, it has been the retailers there. So that's why I think if this deal falls apart, Cabela's could go well under 50. So that's the concern here, why risk arbs are saying, or a little bit taking some profits here this morning, or, cutting their losses by knocking the stock down 7% in the pre-market.
Yeah, and if it's coming down here, I mean, the area that it emanated from before this deal was announced was a little bit lower than here. So let's go back to the dailies and see if we can find out where it was when it popped to, Dennis. Any interest in this if it gets back in here to the $54 area? I mean, that's
No, just because I'm concerned that this cash, they need this cash deal because retailers, like I said, have been killed. And I think I was saying 50. I think if the deal falls apart, it probably goes under 48. Just start looking at the charts of the other retailers, and that's what it'll start to do. And I'm just concerned for the retailers overall here because it has been an interesting 2017. We'll say that. Let's use JWN as an example here because JWN, you say, okay, well, it hasn't been that bad a year for the retailers, but it wasn't, 3 weeks ago. But now you're looking at JWN. It started the year around $48. We're right around $48 here again. So it's been a really volatile year. We ran up the first 3 months, then we got murdered all the way down in the summer, down to $35 on JWN. Then we rallied it all back and came up to $61. Now we're back at 48. So it's been a yo-yo type of year. We're basically where we were when we started it for JWN, but the retails have really been weak here in the last 3 weeks. I don't know if that trends do tend to reverse come January. Things change come January because they have a lot of tax loss selling, or you have portfolio managers just shifting their allocations around for their end of the quarter, window dressing, whatever you want to call it. So that's why trends tend to reverse in January. Let's see what the retailers do come January here. Let's see, maybe we'll get the December numbers. Maybe they'll be a little bit better, for the final quarter of 2017 or 2016. But the retail's been real ugly in the last 3 weeks.
And you mentioned several charts here. JWM sitting on a cliff here at 48 even. You also mentioned, look at Macy's, same thing here, holding in at the $36 level. Kohl's, Target.
Kohl's is real interesting. Stop at Kohl's. Okay. Look at this consolidation from the last 3 days. 49.55 was the low, 50.55 the high. The next day, 49.52, 50.45. The next day, 49.54, 50.29. So you have 3 days here where the highs and lows are very close to each other. So I guess you go. It starts breaking out over 50.50. Maybe you look for the long side. If this stock starts to break down, this is what I like better. Starts to break down through 49.5, gets down to that 49.05 that we got onto when we gapped up on November 10th, then you're in a gap. Then it starts to open right up. So this is interesting here. I think if the stock starts breaking down below 49, it could go to 47 in a heartbeat. So Kohl's very interesting as a setup from the short side if it starts taking out those 3 lows from the previous 3 days.
And another one that I've been looking at and did pick up a few puts on it a while back, Lululemon. Had a huge gap up after earnings. I think it actually might have made the high on the day that the earnings were released. Yep, there you go. It gapped up to 72.50 and then started to back in and went a little bit farther out in this one. Got the month of January too. Now this is just a teaser too. I mean, just sitting here. I don't know what's holding it up from that low into 63, but kind of would like to see it to fill the gap here down to $60, but definitely here. Some profit taking in some of these retailers. Not quite the disaster that we had at the end of last year. I guess we'll just have to wait and see how the Christmas season went and end of the year shopping.
All right.
8:35. We're gonna try to grab Sean.
We're bringing in Sean on the hot.
Yeah. You told me that, and I forgot you said to do that. So let's go ahead and call Sean. Are we taking bets on like what he says or anything, or how are we doing this?
He might say what he said last time when we had him on mute. So we're going to be no wages. Sean Udall, CIO of Quantum Trading Strategies. We're going to be dialing up Sean here. He's been on the show several times. He's not shy about his opinions on the market, both long and short. Are we dialing Mr. Udall?
Dialing Mr. Udall.
One ringy diggy.
I hope he's awake, because he's out in Arizona, right?
Yep.
All right, so let's see. Sean is not answering his phone. So we can take a break and try him again, or we can try his different number. What
has been forwarded to an automated voice message.
You could leave him a message here online. Let's take a break. Take a quick break.
Should we talk to Sean's voicemail? All right, let's take a quick break, and we'll call Sean back. We'll be right back.
Welcome back, traders and investors. Tracking down Mr. Udall here. Must be counting his profits from the trading year. But while we track down Sean, Dennis, you say there's some huge imbalances out there.
Yeah, end of the year selling here in a lot of different stocks. These are the biggest ones I've seen in a long time, guys. Procter & Gamble, 149,000 to sell. Merck, 214,000 to sell. Pfizer, 386,000 to sell. Verizon, 247,000 to sell. Walmart, 128,000 to sell. ExxonMobil, 179,000 to sell. Chevron, 117,000 to sell. General Electric, which is on sell balances all year, 491,000 to sell. Caterpillar, 105,000 to sell. Ford, 80,000 to sell. Just keep going. Wells Fargo, 75,000 to sell. Coke, 45,000 to sell. These are all sell imbalances across the board. I'm shocked really that the S&Ps aren't responding to this at all because they're pretty big here. Maybe they think there's going to be big institutions that come and offset this. That could be the case here. But I'm seeing a lot of sell imbalances, which is an indicator that we may actually open down on a lot of stocks at 9:30.
Yeah, and that's very interesting here because the SPOOs just don't even seem to be budging.
Those stocks are going down, though. So those stocks were flat. Like, bring up ExxonMobil. Look at the trading here. ExxonMobil was trading up. Now it's actually trading down. It was 90.45 it was trading at. At 8:30 they started hitting it because that number comes out. 90.35, 90.15, 90.11. Now we're at 90.10. So ExxonMobil just dropped 35 cents on that imbalance number there. That's just one example there. Verizon's another one. Verizon was 53, well, 81, so it hasn't really traded, but went off for 53.70. IBM is 69,000 to sell here too. IBM, a good example. It was trading up. It was 167 just with some odd lots there, 167 and a quarter. It's now 166, so it just fell $1 on that, those imbalance numbers there. So you're seeing individual stocks here get weak despite the S&P futures. What are the S&P futures? Give us, what they've done.
They're up. I mean, here I'll just even go to we have a interesting dichotomy here between the futures and the stocks. Barely budged, Dennis. I mean, you can look here. Right here is 8:30, and actually we got an initial little pop here and made the high of the session. Here's 8:30 here.
There's a lot of them that don't have much. So I do see, I listed off all the big ones. But I do see a lot of stocks, like, for instance, 3M only has 2,300 to sell. I'm looking at, I don't really see any buying balances. Nike is 8,000 to buy. So, but there's a lot of small ones. So I'd say, probably of your S&P 500, obviously only a portion of them are New York stocks. We don't get the NASDAQ imbalances till 9/28, so we don't know what they're going to be like yet. But of the New York ones, of the Dow, especially the Dow, like looking, there's a lot of Dow components here that are looking like pretty significant sell imbalances here.
All right. Well, we will keep an eye on those to see. Right now, the S&P futures are acting as those will be offset here. One question in the chat here, going back up to Violin Maker. Does the significant price difference between AMD and Nvidia have any influence of one versus the other? Dennis, you want to tackle that one first?
I'm not sure exactly what you're asking, but what I will say is just the fact that AMD and Nvidia have moved together on a percentage basis. So if you're looking percent to percent and just look at what the stocks have done, even over the course of the last month, bring up the AMD. AMD has went from 7 to 11. Nvidia, and this is the last 5-6 weeks, Nvidia has went from 70 to 111. So you're talking, just multiply times 10. They've done actually both the same thing. So both of these stocks are still moving in tandem. If you put the two charts on top of each other, they look very close to identical. So these two stocks are tracking one another. I'm not sure who's the leader, who's the laggard here. I would imagine it's Nvidia leading, kind of. But, they probably do lead each other to a certain extent as well. But, on any given day, if Nvidia is trading up 2-3%, AMD is usually trading up close to 2 or 3%. So it's a new pair trade that a lot of traders are trading those two with each other. Even me, I was trading them with each other as well. Overnight here, I've been trading AMD against Nvidia. So there is an opportunity there if you're trading those two stocks to trade them against each other, and the pair traders are using that as a nice pair.
Yeah, I think just going into it, I mean, you look at AMD, I mean, this thing throws around some major volume here. So I would have to say that it's more attractive to day traders, right? Because you got volume, you got liquidity. That stock traded $50 million yesterday, $71 million the day before. Nvidia, $100 stock, probably a little bit more institutional holdings. Let's see, Nvidia's been throwing around some volume too lately. Has really picked up. So yeah, definitely some arbitrage opportunities. And wow, Nvidia traded $54 million yesterday.
Unbelievable amount.
Yeah.
I mean, when you got a stock falling 5% and then rallying, 8-9% intraday, it's a stock that everybody's watching here right now. There's a lot of stocks that are very quiet, not Nvidia, and it's going to be wild here again. It's trading up another $1.50 as people are scrambling to get in, and it was predictable yesterday. Somebody was asking, what was it going to do today? Well, I don't have a 3-day rule. I have a 2-day rule. The 2-day rule, which I talked about yesterday, was you usually get follow through the next morning after a big reversal day or a big down day, and that's what we saw. We saw the follow through. We saw the washout, and we saw the buyers eventually emerge, late morning, early afternoon, and they bought it all the way back up, so the stock closed positive. Now, people are thinking that was a dip. I got to jump in, and they're following it again here. But I don't know if those buyers are there's going to be also some overhead supply here too. So now you're kind of a battle between the bulls and the bears. People who are thinking, okay, that was a pullback, I got to get long this thing now. It's going to be the stock of 2017, and the people saying it topped out 2 days ago near the 120 area. It's back here at 113. I just watched it go down to the 104, 103 area, and now I'm going to book some of those profits, because I got half of those profits back when I went from 120 to 103. So big battle between the bulls and the bears today in NVDA.
I'm kind of kicking myself a little bit here because I really got caught in this Nvidia, and that was just that was like a gift from heaven to have left come out on that, and make that call, and I started to cover. I covered half of the position very early on, and then I just kind of got lazy with it. I thought it might go back down and test that $100 level. But, it was definitely, it took off half of it, got my money out of the position, so the worst thing I could do is break even. But, boy, oh boy, I mean, you think about it, it fell basically 17 points from the high on Wednesday.
That's your pullback.
Yeah, that was, no, that's not, okay, Dennis, 113 even. I'll give you one, ooh, this is going to be a tough one. You might take it. 123 versus 103.
No, I'm not. I have no idea where
Yeah, it is. It's tough.
I had a good call yesterday on. I called
You're
the
gonna
entire
quit on
path. It's
that.
probably my best call of the year. I'm not going to come in. You didn't take me on the bet yesterday, so I'll come in here today and not call it right. So, no, I don't know. It's too big of a battle between the Bulls and the Bears here. I think it's a coin flip at this point in time, and it depends on what they're going to do in 2017 too. I think you're obviously probably going to not test, go down to 103. I think it's going to be a little quieter than it was yesterday. But to just say, it's going to give it all back, or it's going to rally up to all highs, I don't know. So
all right. That's fair.
On my hands in this trade.
You made it. You made a great call yesterday.
All I do know is those imbalances are huge, guys. That's information that they don't give you anywhere else. So we're giving it to you right now here. S&P futures, we're down about half a point to a point now. And I think they're going to keep leaking here if those imbalances do stay, because they're big. I mean, these are big sell imbalances on individual stocks here. There's a few, like I said, that don't have any sell imbalances, but at the same time, everything that I'm looking at, what's really standing out is some big sell imbalances here this morning. It's some major components of the S&P. So S&P slowly starting to leak here a little bit as maybe traders start to believe what they're seeing with these huge sell imbalances.
Downward Dog, we did talk about Mobileye earlier here in the show. I had the good news yesterday. I'm looking for some continuation. You are getting it trading up on a little bit of the pre-market. Pre-market highs 38.90. Just keep an eye. There was 3 highs between 38.95 and 39.03. That corresponds with the pre-market high. So you want to see this thing barrel through 39, and then you got a little open air up to 39.5. I mean, Dennis, you made a good call yesterday, and I did okay on the Goldman Sachs one, but did we discuss Phil Davis's call?
No. We had good calls on the show. Everybody had good calls yesterday. That was unbelievable. Phil Davis, too. He was coming in saying, his stock pick of the year, I don't know, he might have to adjust it after yesterday's move, but he was saying for 2017 was Silver Wheaton. Well, made the move in 2016. It went up almost 10% yesterday. SLW, all the miners, all the precious metal miners were monster moves yesterday. Bear Gold up huge. Newmont, Gold Corp, you pick your poison. If you were a gold miner or a silver miner, you were rallying hard yesterday.
Yeah, Phil's World. We'll take a look.
Phil's World, excellent. Well, we can follow that Phil World guy, man. He cut the call.
He did. He had a great call here. You had the gap and go. 1848. Oh, yeah, Larry, you called it too. I will. Larry was on that early as well. You had the gap up 1848. Once again, we talk about the opening price and had the 1881 open. And if you could have just closed your eyes and buy it and not worry about the gap fill down to 1853. 11 cents off that opening print, and then you sprinted it into the 20 handle, 2026 with the 22 close. Kind of quiet action here in gold today and silver trading up a bit. Keeping an eye for trading the silver Wheaton. You had a high on November 17th at 2015. Then you had another high at 2051. And then this is like when gold fell. Gold and silver had those bad days back in late October, early November. So a lot of air in here. And, once again, you get this kind of this accumulation here. We'll bring up Gil Morales again here when you can tell when the big players are squaring off here. A couple days of quiet ranges in silver wheat, and now a nice move up. So we'll see if that can continue.
Ratings changes. There's not a ton here today, but we did have comments from Baird on Tesla, and they were positive on Tesla, and it was their pick for 2017. So Baird getting bullish on Tesla. TSLA is trading up another $2.50 on this. Tesla's been on a run, and I feel like Baird's a little bit late to the party here because we just go back to just, at the beginning of the month, start at 180. So it's been a pretty good December already. So I feel like, if you're buying it here now at 217, you're a little late to the party. I mean, I would have liked to have saw this call back, when the stock was 180 or 190. What are your technical thoughts here on Tesla?
220. I just keep an eye on that area. You did get through it a couple days ago. Got well through it. You got to 223.80, and that you had a high at 22 and a quarter. And this is when you talk about the closes. You had a high at 22 and a quarter on Tuesday, 1953 close, and then the next day, I'm getting my days. Yeah, Wednesday you went up to 23.80. But then you closed down at 1974. You couldn't get that close. And then there was some bad news out there yesterday. The bad news. And this is kind of just social media. I mean, someone on YouTube came out showing that they had problems with their steering something. Let me see. Circulating YouTube video of owner discussing loss of power steering. If you're trading on that kind of news, I mean,
yeah, ridiculous.
I mean, if you're short and you see that kind of news, you should think about covering. But if you're going out and you're seeing that kind of news and you're hitting stock, I mean, you are going to absolutely find a bottom in it, and it did get a little of a bounce. I'm just looking, a couple sustained closes here over 220 for your next move up. And, this thing, I've written a few different articles on it, and it seems like every time it gets down here to 180 and I get super bearish, it turns around. And, yeah, I mean, that is the long-term level here in Tesla. I don't know. Hopefully they can sell 5 or 6 more cars, in the next quarter. But is CT, Solar City must be off the board, huh?
Yeah, Tesla, yeah, they did. The merger was completed.
All right.
So not part of Tesla.
How about, let's do a little more solar. How about First Solar? Not a good year here for the solar stocks. And
you called this one. This was your call of 2016 because you were bearish this thing up at like $65. It's now 32. So we'll give you this one, Joel. You're all over this one.
So what do you think here? Even with the Trumpster coming in and the talks about Goldman?
I don't know. The chart is not pretty. I mean, but like I said, trends can reverse come January, so it's so hard to just jump in here shorting it now. You got support at 32. Starts taking that out, you start to get concerned. I could see a little head and shoulders pattern from the last month. Just looking in December, you kind of got the left shoulder around the 34, the head that double top up around 35.5, then the right shoulder around 34. Your necklines here, or you start going below your neckline around 32. You start cutting down through 32, you're at 30. So, I mean, that's your bogey. If you're along this thing and it starts cutting through 32, I don't want any part of it.
Was that when Gordon Johnson was on last time? Was he a little bit bullish, the solars? Because Flack
He's usually bearish a lot, but
it was a temporary thing.
He's usually bearish a lot.
He was bullish. It was a temporary bullishness, and I think now he's back to being bearish.
All right, you know what?
Eternal bear, really.
Yeah, he is. Flack, Brad, thank you, because I'm going to track down. We haven't had Gordon on for a while, so we will get him on after the first of the year as well. Dennis, did we finish covering the imbalances?
Well, they're all there. They're still pretty big to sell across the board. You can see the S&P futures now have dropped about a point here. So just quietly, you're starting to see some of those stocks come in, though. Like I've seen Merck trade down 24 cents again, 212,000 to sell. Merck is a huge sell belt. You say, what's 200,000 shares? In the morning, there's not a lot of institutions showing their hand. So whatever institution's showing their hand here, traders are trading against it because obviously Merck has come down significantly. We just looked, Merck was trading up in the pre-market. They started slamming it as soon as that number came out right at 8:30, and it's now trading down 25 cents in the pre-market. If these stick, these things could open down pretty significantly here. So I'm not surprised the S&P futures have fallen a point. I think, if they stick, I think you'll see the S&P futures fall a few more points before the open. So like one of two things are going to happen. When you have those big sell imbalances, either they're going to flip to buy, which, on these days, they don't typically move around. It is the end of the year, so some funny things can happen, but it's not like an option expiration where you have a lot of players jockeying option positions. So I don't know if I see big buyers coming in to offset these. So I tend to think that the S&P futures are just going to come in a little bit more. So I've actually shorted some S&P or some SPY just in the last few minutes here, just, banking that maybe these imbalances are true and some of these stocks are going to open down. Obviously, your index ARBs are going to come in and start hitting futures then.
A question for you guys. I just got a phone call from Sean Udall, and he's there ready at the phone. Should I give Sean a call? It's 8:54. Should I call Sean?
Give Sean a call.
Okay.
I'm going to go trade some stocks here, so we'll let you guys run with the interview. So have a happy or have a happy New Year's. We're going to talk to you again. I'll be back with you 2017. We'll let Sean, Joel, and Spencer take it from here.
Hey, Dennis, hang on so you can hear one of my New Year's resolutions.
Okay.
We are calling Sean on live, and I think he will answer this time. So Sean Udall, the CIO of Quantum Trading Strategies out, I believe, in Phoenix, Arizona. He is there, standing by the phone, waiting for a phone call. So we're going to talk to Sean. What's he going to talk about today? Twitter? Apple?
Major support at 80 and Ellie Mae there. Keep an eye on that downward dog.
Good morning, Benzinga.
Are you on the same kind of schedule as Spencer Israel? I mean, what the hell's going on, Sean?
I'm actually not, but I do apologize. I've been having just these seriously messed up internet problems for like the last 3 days. I actually had Cox cable out to my house for 2 hours yesterday, and I still have the same problems this morning. Anyway, so I got to do this on the fly and looking at my TV and just talk to you because I don't really have very many stock quotes yet.
Okay.
So
so good.
But
That's
it doesn't really matter because I'm probably not going to do many trades today. Anyway, fire at me, whatever you want to say. Go ahead. But I do apologize.
All right. So I got some tough questions for you here. Okay. So let's say someone shows up at your house today and they say you can have two stocks in your portfolio for 2017, one on the long side and one on the short side. And you can't trade around it. You can't do anything. You have to buy it on on Tuesday, and you can't sell it until the last trading day in 2017. What would be the stock you would buy, and what would be the stock you would short?
I like this.
Yeah.
Okay. Yeah, I like this. You know what? Okay, we should do like four. But anyway, the easiest short would be Nvidia. Well, I mean, maybe people don't think it's the easiest, but that would be my short. I do have like three others though.
Why?
But anyway, that would be my short.
Why?
Well, and by the way, you could go and look at my Twitter history. I've been saying pretty much once it got into the high 90s, to me, from that point, I've called it a parabolic move, parabolic move. But here's the biggest reason. I think people have forgotten what Nvidia is. Folks, it's a chip company. It's a semiconductor stock, okay? If you go through and just look at charts of semiconductor stocks, what do? They go up a lot. When they're in a really good positive upcycle, they go up a lot, okay? And then what happens is, and for example, you just look at Micron going from $4 to $40 from 13 to middle to early 2014, right? And then what happens is they go into a cycle where maybe business doesn't get bad. They still make money. They still make cash flow, but growth dies. So what happens? Micron goes from 40 to 10, okay? And by the way, Micron was the same company the whole time. And you could look at Nvidia, you could look at Intel. Intel's a little more stable than most others. You could look at Skyworks Solutions, et cetera, et cetera. Nvidia, at the end of the day, is a chip company. They have not invented a cure for cancer. They have not invented the new internet. Nvidia is Nvidia. They're a chip company. They have cycles. They caught a really good cycle. I mean, they caught a really good cycle where like all their main products kind of worked, and they had a huge amounts of earnings beats. But they're still a chip company. So, and chip companies have a habit of going up roughly 2 or 3 or 4-fold during a good cycle. That's not uncommon. That's a big move, but it's not uncommon. And then guess what? They typically lose anywhere from 40 to sort of 70 or 80% of value during a bad cycle.
So are you playing it yet? Are you playing it yet, or are you just you're waiting for your?
I've actually shorted it twice. I've shorted it twice. Made good money. The first time I shorted it was almost the prior all-time high, like in the high 90s. I think it caught like 5-6 points. And I do have some puts right now. Full caveat being that I kind of thought like 10, where was it? 107 to like 109-ish. I kind of thought was pretty close to what should be a parabolic high. Went higher. So, and then it went down a bunch the other day. But yeah, no, that would be my first, the easiest short.
All right, give us a couple.
Especially if you give me a whole year.
Okay.
Now, by the way, they could have a really good. I think they're going to have one more quarter. They could try to spike it one more time. So, by the way, here would be the perfect sort of setup. The Nvidia has another good quarter, and they gap the thing up one more time. And you're shorting it instead of what? See, again, I don't know where it is right now. Is it 112, 114? I don't have the quote.
112.40. 112.40. It's up at 97 cents.
So let's say they gap it to 125, 130. People run it to 135. Whatever one more gap up is, that would actually be an even better short. Because what could happen is what happened, for example, to Apple about a year and a half ago, where they actually had a blowout quarter. The stock gapped up to what it is, its all-time high, but guess what? It had no more juice. And then it was basically a free fire zone for like 3 quarters. And I kind of think that's what's going to happen to Nvidia. Or either that, by the way, or they missed the quarter. In the first quarter they missed, the stock would go down 30.
You're going to kill it. Yeah, okay, give us, not quite as in-depth, but, and Ace hops in here and he says, let Sean choose the time frame in the call. So why don't you give us, 2 more on the short side, and we'll let you choose your time frame and the call.
Yeah, well, I still don't mind a full year, but yeah, because the time frame, the one thing I don't know if I would jump on shorts hard in front. Like here, this is another great one, Facebook. And I could say, instead of Facebook, I could say Amazon or Netflix or really, and even Google at this point. And Google is still the stock out of the 4 FANG stocks that I think is the best quality company, which has the best long-term trajectory. But I really almost think you could, so I'm going to say Facebook, but you could interject any of the 4 FANG stocks here. Now, same thing. If you short them right now, what if they pop a really good quarter? And all of a sudden, so let's say you're trying to time, January, February puts or something like that. Well, if they pop one more good quarter, you're going to eat those contracts. And then you might think, oh, that was a bad short. And you might forget about the fact that this thing could be really good over 3 or 4 or 5 quarters, right? But I pretty much think any FANG stock is sort of the same. Now, here's what's interesting about these is these have already started rolling over, and kind of the bubbles have been pricked a little bit. So Netflix on its own right has already had 2 or 3 huge drops. I think anytime this stock starts kind of edging up to an all-time high, you can basically short it, or just really any bounce. Facebook again could have a good quarter, although I think the last quarter for Facebook was the last great quarter. And Google's a scary one, but Amazon, same thing. I just think, trees don't grow to the sky. But I think those are all very good. And I have been short 2 or 3 of those names at any point in time. I am currently short Facebook.
All right, so we're on the line with Sean Udall here. He's the CIO of Quantum Strategies, a frequent guest on our show here, and little internet problem. So we're going to run a little bit longer today, folks, if you don't mind, here on the last trading day of the year. Okay, so let's flip side, and let's go back to my question of one stock that you got to buy today or January 3rd. You're going to hold it for the whole year. What is it going to be?
Yeah, I'm actually going to say, I have two or three. The safest one, and I'm not going to go with the safest one. I'll probably go with a more controversial one, and I'm not going to go with the one you're probably going to think I was going to say. I'm going to say FireEye, and it's FireEye. FireEye is almost like an Nvidia on the other side. So what's interesting about FireEye, and I'll make this real short. I mean, really, the chart has started getting better. You start getting bounces. They've had 2 quarters in a row, which has been relatively good, and the stock's done. And you get a little pop, and that does nothing, just does nothing. But the bottom line is this. To me, this I'm just picking a stock in a secular space that I think could be pretty explosive this year or next year. And really, this would probably be for about 6 quarters. I think you can get 4 to 6 good quarters out of the whole cybersecurity space. So kind of like I did what I said with Fang, FireEye, you could interject a CyberArk. You could interject. Now, a stock I don't even like, which I think is a good buy here, is Palo Alto Networks. I won't want to hold that a whole year, though. But I think Palo Alto is going to have a good move, and that's a stock I was saying was a short. I think roughly 50 or 60 points higher.
Why do you think? Why do you think the
CyberArk's
street?
another one
Why
I
do you
like.
think the
Go ahead.
street's ignoring these? I mean, why do you think that the street doesn't? A couple good quarters out of FireEye. I know there's been some takeout rumors. What's wrong with the street here? Why aren't they interested in these stocks? And they're showing some good numbers.
I think part of it is, I mean, and by the way, we could interject a Twitter, we could interject a Splunk. Splunk is another name I like tremendously. I think something's happened this year which we haven't seen for a lot of years. I think we've had a tremendous amount of tax loss selling. And what interestingly is as kind of weird as last year ended, as weird as 2015 ended, we didn't really have a ton of tax loss selling. And in 2013 and 14, you don't have a lot because those are more winning years, right? So I think this is a year. I almost think there's people tax loss selling Twitter, not from buying it this year, but from buying it a year ago. Same thing with FireEye. Same thing with Splunk. Same thing with a bunch of these these what I call these high growth software companies that really the last 2 quarters have been pretty good, and the stocks did bounce early. I mean, CyberArk was, again, don't have a quote, apologize. I want to say it was 10 points higher after they popped after a really good quarter last quarter. But that stock has done nothing but be sold off almost the whole month of December. That's CY.
Got it up,
CYBR.
yeah, $45.
Yeah.
It went to 56.
So now that would be a close second or third. Splunk would be a close. But see, here's the thing. I really believe cybersecurity stocks could have a really major move again.
All right.
So if you hate FireEye, well, look at CyberArk, look at Splunk, look at Palo Alto Networks, and then the stock I'm still sticking with is Twitter. And I'm going to say one thing: most people hated that stock, and they missed the 10-point movement last year. And you know what a 10-point move off of 14 or 15 or 16 was basically almost 40-50%. So if you can time this thing, and you can maybe Twitter doesn't return to the glory I think it should. But, hey, if it goes back to 25 or 28 or 30, and at least it does it a couple more times, as long as you're not buying it at 24 or as long as you're not buying it at 28 and hoping it goes to 60, I think the problem with Twitter is everybody got caught up in the hype and bought it at 22 to 24 and then crapped out on them again.
Yeah,
but if you're building a position, at 14 to 17 bucks, I don't know. I had a good year with Twitter this year. I think a lot of people didn't, but I had a good year with Twitter this year.
Yeah, we talk frequently here about, the setups and stuff, and, here we are, making multiple lows in the same area. I'll just give you the last 5 lows in Twitter have been between 16.16 and 16.42. That's the kind of formation I like. The reason I kind of like it is because you can buy it here. Hey, if it cuts out below 16, closes below 16, then hey, I'm taking a small loss and reset. But
there you go. You go. By the way, like a Twitter here, maybe okay. For me, if it doesn't work, if it hits 1580, 1570, I'll give stuff maybe a little more room than you. But I'll cut it out and I'll try it again, right? I mean, I've taken some small stop losses on Twitter this year, but I've caught some huge moves, and I would put Twitter. Here's the difference that Twitter needs now to bust some heads, and what I mean by that is they actually need to communicate. They need to produce quarters that actually scare the shorts. The whole thing with cybersecurity, I think it's so Twitter might. Twitter might not be as great from January 1st to December 31st. You know what I mean? Twitter, we still need to see a quarter where a big money manager like the Fidelity says, okay, I got to start buying Twitter again. And unfortunately, Twitter hasn't really given the institutional guys a big reason to buy the stock yet. I think they will, but they haven't done it yet. But the cybersecurity thing just feels really, really good to me. And then, by the way, I'll just throw in a bonus. You know, we had a lot. I've just talked about semiconductors, right? So interestingly, Nvidia has had a glorious cycle where everything, again, gaming, where everything has worked for them, right? There's a lot of semiconductor companies that have been in kind of that mediocre to a poor cycle. So I would watch things like Qorvo, IDTI. We just saw InvenSense get bought out. That was one of my names that caught a double plus off the lows. But the bottom line is that, I think I said Skyworks. By the way, Skyworks was a name I loved like 3 or 4 years ago. Basically did an Nvidia move. Skyworks went from 20 to $100, and look at what Skyworks has done from 100. I think if you had bought that stock near the highs, you're still in it 2.5 years later and 30 or 35 points lower, right? So Skyworks has been basically building a base, marking time. Now they're going to go into a much better product cycle for them. So same with Qorvo, same with IDTI. I think that's fully why InvenSense got bought out, because whoever bought them goes, hey, you know what? InvenSense is probably going to get into a pretty good product cycle for the next year or two. So there are a lot of kind of semiconductor stocks that, as long as you're not scanning the 52-week high list, you can find some good semis. Anyway, you can ask me what you want. I'm kind of rambling on.
That's okay.
There are a lot of names that have been beaten up.
That's okay. You in the chat here, Flack UK, is there any cybersecurity stock that actually makes a profit?
Well, yeah. I mean, there's CyberArk makes profit. Palo Alto makes a profit. By the way, even FireEye does not have top-line profits, but they have been cash flow positive. I want to say for 4 quarters now, maybe even longer, but for sure 3 or 4 quarters. Imperva, that's a name I left out, by the way. I like that one a lot too. IMPV, they beat earnings by 25 cents last quarter alone. They make profit. They're all cash flow positive. So a better question is there a cybersecurity space that's not cash flow positive? I'm not sure there is one.
All right.
Yeah.
Okay. Brad's asking about the imbalance updates here, and going back and forth with Dennis here. He says they're still there. They're still out there. So some big sellers on the open. We'll let you know if anything changes. All right, Sean, you made some great calls on the overall market this year. I've witnessed them when they were pounding us down. Brexit, you were just like, it was ridiculous.
2450.
You sticking with
S&P 2450.
And
yeah,
you're sticking with it then, huh?
Oh yeah, and in fact, so here could be the thing that happens next year that nobody expects. And by the way, I think we're going to have a big rotation move. I think we kind of talked about this. Dennis and you and I, we talked about, hey, at some point you kind of got to rotate. You kind of got to look for some of these stocks that have been beaten up. I think we all caught a big biotech bounce, like from mid-year, early year. So I'm not so sure next year is going to be a great year for the indices, because last year was sort of a great year for the indices, but it was kind of a mediocre to poor year for probably like 50 or 60 or 70% of stocks. So I think everybody talks about stock picking, and it's going to be a stock picker's year. And last year was more of a stock picker's year, but it still wasn't great. But I do think if the FANG trade breaks, if it ever really breaks, and these really, really high multiple names that, again, I just don't know why they're trading where they are, but that happens sometimes. If things reverse and people sort of seek out things that have good fundamentals at cheap prices, I think people could be surprised. And the parallel I would draw would be going into late 2012 into 2013, and I'm sure you remember this. Nobody in the world expected 2013 to be any good at all, and we're kind of in that same situation now. I mean, there is some people, Trump could change taxes, and maybe we get some relief in some other areas, Obamacare and things like that. But what's everybody calling for? Everybody's calling for a 1980 Ronald Reagan post-inauguration redux of a correction of 10 or 15 or 20%, which did happen in 1980, right? But to me, this doesn't feel like 1980. It feels like 2012. The only problem is in 2012, the indices were relatively cheaply valued. They're not right now. But the indices right now are basically made up of 8 stocks. The S&P isn't made up of 500 stocks. It's made up, the valuation is made up of 6 to 8. The same thing with the NASDAQ. So if the one thing I think we have to be wary of is just what if stocks act differently than the fund is saying? What if we don't get a post-inauguration correction of 15 or 20%? What that means is the market actually could surprise and could go a lot higher than I think people think.
What about Symantec? What about Symantec as a security play? SYMC.
I don't like it because that's old guard. I think they bought out something like LifeLock recently. I mean, put it this way: Symantec is a lot like Oracle, and what's happening to Symantec and Oracle is all the younger, high-growth companies with newer, better products are just feeding at the top of them. So they're all taking market share off of the edges of Symantec, and I don't know if Symantec's core product suite has ever been great, which basically has spawned. I mean, you can make a case that if Symantec and McAfee were great, you wouldn't have CyberArk and FireEye and Palo Alto and Imperva and Proofpoint and blah, 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 right? So, yeah, I mean, other than if you're kind of a deep value player and you think that maybe they could still get bought out, I doubt Symantec gets bought by anybody. So now I'm not a big fan of that. Again, under 20, under 19. That stock was even cheaper than it is right now. It is cheap fundamentally, but the thing is, I don't really necessarily like a tech stock just because it's cheap fundamentally. There still has to be a reason around it. But yeah, no. In fact, I would say I have to see how the market reacts at 24.50, my friend. And if okay. if the reaction isn't hitting a brick wall from 90 miles an hour to zero. Then we're going quite a bit higher, actually. There's a lot of historic charts you could pull up and things like that, but we'll see. My call's still 24.50. I'll see how we react to it, but I kind of do think with the reaction to it won't be like hitting a brick wall at 90 miles an hour.
June,
I think the market will deal with it pretty well.
Is that a year-end call? June, July, August? I mean,
no, I would say 24.50 could be for first quarter. So I'd be surprised if it won't be second quarter. But yeah, I put it this way: if we're going to get to it and get to it well, and the market does what I think it's going to do, yeah, I'd say we probably hit 24.50 in Q1 or Q2.
You heard it here first on Benzinga's pre-market prep final show of the year. Sean Udall sticking with his 24.50 target. Sean, I'm really glad we got you on here, and some good calls. We'll be following all of them very closely, and we'll try and get you on the schedule here on a regular basis come January.
Hey, thanks, man. Thanks for having me. Everybody have a great new year. I'll talk to you next year.
All right, 17 minutes over here, Spencer, on the final show of the year. And I was just going to go for one New Year's resolution that I know I can't keep. I was going to say I wasn't going to do any weekly options, but maybe I'll just keep it to like one a month. So
fair enough.
Going into January, giving myself a little bit of time. Spencer, any New Year's resolutions for you?
Yeah, I have a New Year's resolution. I'm gonna one that I also will probably not be able to keep, but I don't know. No more technical difficulties on the show.
Oh,
starting right now is my New Year's resolution. I'll be in the office probably on Monday. We'll be off on Monday. I'll probably be here trying to figure out some stuff and why this happened, why we have some echoes on some days and not other days, and all that good stuff. But 5 minutes late, 17 minutes over, so 12 minutes of extra show time today. Not a bad day, I would say. This is the last show of the year. Obviously, do want to remind people that there is a lot of big market moving events coming up in the first couple weeks of the new year. We have the North American Auto Show from January 8th to 22nd. CES, the tech conference, is from the 5th to the 8th, and then the JP Morgan Healthcare Conference is on the 9th to the 11th. Plus, we have the inauguration. So, a lot of big stuff happening in January. It'll be a big month. 2017 will be a big year for us, a big year at Benzinga. Hopefully, it'll be a big year for you as well. But we're going to let you go now. Hope everyone has a good rest of the new year. And I'm being yelled at to talk about Benzinga Pro because it's also going to be a huge year for Benzinga Pro, the biggest year ever for Benzinga Pro. Okay, the sales guys are yelling at me. I'm ready to get off the air now. So have a good day, everyone. Have a good weekend. Have a happy new year. We'll be back with you folks in 2017.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.